Good morning, everyone, and happy Thursday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. All right, guys, welcome back. Thank you all so much for being here, and happy birthday, Marines. Today, we'll be taking a look at exciting stock market news, but mostly notable earnings reports, and we'll see which stocks are the morning's biggest gainers and losers. Just a heads up that many of you might have tomorrow off for Veterans Day, but the stock market is still open, so make sure you stop by as I will be here tomorrow morning. Now, let's get right into this morning's exciting stock market news. U.S. stock futures are in the green this morning ahead of CPI data being released, which should be coming out any minute now. Right now, Dow futures are up 0.12%, S&P 500 futures up 0.2%, and NASDAQ futures up 0.41%. Brookfield Renewable Partners is leading a consortium of businesses looking to make an $11.8 billion purchase of Australia's Origin Energy. The consortium includes BEP and MidOcean Energy. Brookfield Renewable said that under the proposed transaction, Brookfield Renewable and its institutional partners would acquire Origin's energy markets business, and MidOcean would acquire Origin's integrated gas division. Origin Energy is Australia's second largest power producer and energy retailer. The non-binding buyout offer came in at $9 Australian per Origin share for a total value deal of about $11.8 billion. Currently, Brookfield Renewable is rated a strong buy with an average upside of 10%. And that's about it for exciting stock market news, so we're moving right along to notable earnings reports. In the after hours today, we'll be hearing from Matterport, Aurora Cannabis, and Funware. In the pre-market this morning, we heard from Chinese EV company NIO. They did post a wider than expected loss on earnings, but had favorable vehicle delivery guidance. They posted a loss per share of 30 cents, which was 14 cents wider than expected. Revenue came in at $1.83 billion, which was up 32% year-over-year and $50 million ahead of estimates. Deliveries of vehicles are expected to be 43,000 to 48,000 during the Q4, which would be an increase of about 72 to 92% year-over-year. Analysts currently rate the NIO stock a unanimous strong buy with an average upside of 193%. We also heard from WeWork, who missed expectations on both earnings and revenue and announced plans to exit 40 underperforming locations across the states. These exits will reduce their top-line revenue, but also reduce their rent and other operating expenses. Their Q3 loss per share of 75 cents was 30 cents wider than analysts' expectations, while revenue of $817 million was up 23% year-over-year. It was $48 million shy of estimates. Nonetheless, analysts currently rate the stock a strong buy with an average upside of 250%. And we've heard from Six Flags, who also missed on earnings and revenue. Their earnings per share of $1.39 missed expectations by 23 cents per share. Revenue came in at $505 million, which was down 20% year-over-year and $44 million shy of estimates. Lower attendance in the quarter was the reason behind the decrease in revenue. Analysts currently rate the Six Flags stock a moderate buy with an average upside of 40%. In the after hours last night, we heard from Rivian Automotive. They beat on earnings and reaffirmed their production guidance, but did miss on revenue. For their Q3, they reported a loss per share of $1.57, which was 26 cents ahead of estimates, while revenue of $536 million did miss estimates by $18 million. They said that based on their latest understanding of the supply chain environment, they were reaffirming their 2022 production guidance of 25,000 total units produced. Analysts currently rate the Rivian stock a moderate buy with an average upside of 72%. We also heard from Bumble, who did miss on revenue and had disappointing future guidance. Their earnings per share of 14 cents did beat estimates of just 1 cent, but revenue of $232 million missed expectations by over $5 million. For their fourth quarter, they're predicting revenue to be in the range of $232 to $237 million, while Wall Street analysts had previously forecasted $254 million for the fourth quarter. Analysts currently rate their stock a moderate buy with an average upside of 45%. And Beyond Meat missed on both earnings and revenue as they see their losses widen. They reported a loss per share of $1.60 that was 45 cents wider than analyst estimates, and revenue of $82.5 million was down over 22% year-over-year and over $2 million shy of estimates. The company noted that the decline in sales came from a combination of weaker than expected demand in the category and certain customers and distributor changes, such as reductions in targeted inventory levels. Analysts currently rate the Beyond Meat stock a hold with an average downside of nearly 7%. Now let's take a look at which stocks are the morning's biggest gainers and losers. Our biggest gainers this morning are led by RingCentral following their Q3 earnings report. Under the ticker RNG, their stock is currently up 13.5%. They're followed by Coupang under CPNG up 11.5% and Jackson Financial Incorporated under JXN up 8.7%. Our biggest losers this morning appear to be U-Haul's parent company, Americo, but that is because they issued a 9-for-1 stock dividend effective last night. Under the ticker UHAL, the stock appears to be down 89%, now trading at $53 per share. They're followed by EQRX under the ticker EQRX, down over 17.4%, and Xometry under XMTR, down over 17% as well. So that is going to be everything for Thursday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. If you made it to the end of today's video, don't forget to hit that thumbs up button and say good morning in the comments down below. I always appreciate hearing from you guys. Thank you so much for watching. Have a fantastic day, and I'll see you back here tomorrow.